And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Day on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Hi, I'm Phil Grande. Well, a lot's happening. Oil is now around $86, $87. Now that is absolutely nuts. Why? Because there's no demand for oil. And I'm going to give you the proof why there's no demand for oil. Now, if you look at the demand right now, a year ago, the demand was around 20 million barrels a day. Cost $55 a barrel. So 20 million barrels, that demands a price of $55 a barrel. Pretty simple, isn't it? Pretty simple math. Now, I was in the oil business. Know how it works. Today's consumption, the same, 20 million barrels. But the price is up 30 or 56% increase. I can't even get it out. What are you, nuts? 56% increase. I mean, that's insane. $86 a barrel when a year ago the same 20 million was costing us $55 a barrel. You better know how to trade oil. You better know how to trade itself. If you don't know how to trade properly, this is a whole new market. And if you don't understand how to follow yields, you're never going to make money. You're going to continue to lose money. You're going to be part of the 85% of retail investors who lose money every day because they don't know how to follow the yields. Yields are a truth serum. Never wrong. They always tell you exactly what's going on. So let's get to this. So a 56% increase in oil price. Get this, 35% increase in fertilizer. But guess what? The consumption's the same. The consumption's the same. Corn's not going up. Wheat's not going up. I mean, the consumption price is. Who the hell's making all this money? So, I mean, that is just crazy. So, and now think about this. If you take the supply chain, the entire supply chain, that means you take trucking, you take freight, shipping, airlines, packaging, that's our supply chain. Do you know the cost is up 35% since last year? But there's no more demand. This is pure inflation. Now, that 56% increase, that's in the 35% increase and the 25% increase between fertilizer and everything else that's going up, has nothing to do with demand. It's all about headlines. It's all headlines. Example, today, oil soars to a 6-week high amid Trump threats. I'll give you some more. Trump threatens to hit bridges and power plants in Iran. Oil goes up. U.S. attacks Iran for the 11th straight night. Oil goes up again. Trump says U.S. will hit Pickaxe Mountain, Iran's enriched uranium stockpile. Pretty soon, and real heavy, oil goes up, fertilizer goes up, groceries goes up. And the supply chain, trucking goes up, freight goes up, shipping, airlines, packaging. Now, how much has wages gone up in a year? Are you nuts? Wages in 1 year with the inflation is negative. So let's just call it flat. So you got 56% increase, 35% increase, 25% increase hitting every consumer all over the place, but their wages are flat. Has nothing to do with demand. Now, if it was demand, we'd be okay. Now, when it doesn't have anything to do with demand and you're trading either tech or you're trading oil or whatever you're trading consumer stocks, you're trading the economy stocks, you got to remember, you got to put that in the back of your head. And you got to guide your trades with yields, the short term, the long term. What are they doing? They will tell you. I'll give you an example. So let's take oil. So one of our biggest profit centers for us, for the gang, we always buy the oil service stocks when oil prices go up. Why? When oil service prices go up, then the major oil companies, 5 of them, go to the oil service, do great contracts with oil service companies, which I was in that business years and years ago. So when oil goes up, the major oil company, you sit by your phone, it starts ringing off the hook. They want to send you a contract. We need some more rigs. We need more men. Can you get me a drilling crew out here to West Texas? And I mean, it's amazing. And it just gets crazy. But guess what? When you see Schlumberger and you see Baker and Halliburton not going up, and you got all kinds of people jumping in these stocks because they don't know what's going on. They don't understand the market. They don't follow the money. So oil service stocks are not going up, but yet people are jumping into them because why? Because they're listening to the jibber jabbers on TV. These dopes on TV, the jibber jabbers who know nothing, tell them to buy the oil service stocks because the oil is going up. Now, we generally do. But we also follow the yields and tell us not to. Now, the 5 major oil companies, they said they're not going to be spending. So that gives you a red flag. That gives you a signal. Get set up to short these stocks, not buy them, for heaven's sakes. What are you, nuts? They're setting up for a beautiful short. Oil's at $86. You know that Halliburton, you know that Baker, Schlumberger, they're not going to go up because the big major oil companies aren't going to send contracts to them and start getting their crews going and oil rigs and all the stuff that we used to do in the oil service industry. And the oil service industry is getting clobbered right now. So you should be setting up to short those stocks. But people are buying them because you got the jibber jabbers telling them to do it. Now, so if you think about tech, let's talk about tech stocks. Here's another thing. People do not follow their yields. Example, if the 2-year and the 10-year, if the 2-year is going up faster than the 10-year, then you know that multiples will contract. That's not good. So you know if multiples going to contract, what stocks is that going to hit? Well, it's going to hit tech stocks. It's going to hit a whole bunch of different stocks, defensive stocks. So you got to know, okay? So you're sitting there, and tech pulls in 35 to 45. Let's use 45% of all the S&P $500. 45% of all those dollars go to 6 stocks. About 12 stocks. Use 12 stocks. 12 stocks out of 700 stocks. What are you, nuts? So we got 700 stocks to trade every day. Those out of 5,000. 700 stocks. But out of the 700, there's only 12 stocks that gets 45% of the dollars, of the volume. Compared to energy gets 4% to 6%. Financials get 8 to 10%. Industrials only get 6 to 8% of the money that goes to the S&P. Healthcare, 7 to 9%. For all those people who want to jump in and buy staples, well, if you buy Coca-Cola, you buy Clorox when things are bad, you're going to be safe. Oh, really? Well, you know how much of all that money that goes into the S&P? Right? 45% of that money goes to 12 stocks out of 700. You know how much of that money, what percent of that money goes to staples where everybody hides, or utilities? 2 to 4%. That's it. So why do you keep jumping in staples, utilities, even real estate, when only 2 to 4% of the money that comes into the market? And let's take the money that comes in from the big institutions, 12 trillion. 2 to 4% of the 12 trillion goes to staples where most people go to hide. What are you, nuts? So let's get back to tech stocks. So yesterday morning, I'm watching tech stocks. I tell my gang, they're rallying the tech stocks. Now, the same tech stocks they rally every day, right? The 4 big chip machine makers, right? ASML, CLAC, AMAT, LRCX, and then three, okay, companies that buy those machines: Intel, MU, and Taiwan Semi. So there's 3 companies that buy most all of the machines that the 4 companies produce. So you got 12 stocks that are pulling in 45% of the money. So yesterday morning, everybody's jumping into these stocks, and I said, wait a minute, what are they doing? Just like I said with the oil service stocks, we should be shorting them, not buying them. So the tech stock, I look and I tell my members, hey, don't buy these stocks. And everybody was jumping in, but not my members. And I said, you got to be crazy. The stocks, each one of them are in a severe downtrend. That's the problem, a big severe downtrend. You never buy stocks when there's a severe downtrend. You got to be out of your mind, because that means money's coming out. You always follow the money. You don't follow the BS. You don't follow the headlines. Follow the money. If you follow the money and follow the yields, you'll never make a wrong trade. But guess what? That's why out of all the retail investors, only about 10% make money, 10 to 12%. Everybody else loses money. So I'm watching, and I say, wow, look at what's going on. The trend is going down so fast. Money is coming out so fast, but people are jumping in, buying these stocks: ASML, CLAC, AMAT, LRCX, Taiwan Semi, MU, Micron Technology, the same stocks all the time. And I said, don't buy them. They're in a downtrend. And guess what? If you buy them, and even though they're going up today, they're going to unravel. Why? Because 1, they're in a downtrend. And 2, is that you got the 2-year yield is rising faster than the 10-year. That tells you multiples are contracting. That's a killer. It kills rallies. And we were right. And guess what happened today? We were right. All those stocks that were rallying were no more rallies. No, Let's take a quick look at a couple of them just to see if I'm still right. So, I mean, this is amazing. People just, they keep listening to these morons on these TV shows, and they just don't get it. Here, look at this. Look at Schlumberger. Usually Schlumberger would be soaring, okay? Baker. People are jumping in these because they say, oh, all these stocks go up when oil goes up because they get big contracts from the majors. Well, they're not getting contracts from the majors because there's no more, it has nothing to do with consumption. If we had 20 million barrels last year for 1 year, this year we're still at 20 million. So why the hell are we paying 56% more for oil when the consumption has not increased? Well, it's because Trump puts out the headlines that drives this market, that drives oil. But that's okay. Because if you know how to follow the money, you know how to follow the yields, you'll always be on the right side going long and on the right side going short. You can't possibly make money in a stock market if you don't do both. If you don't know how to short, you only buy, and you don't know how to follow the yields. I have for my members, I have a little book, I call it, where I give them all the different scenarios. So when the market's rallying and they want to buy a stock, they look and say, okay, well, if the 10-year is rising and the 2 years flat, what happens? Well, banks, okay, industrials, energy, they all go up. Oh, so following yields, you know exactly what companies do. So if you have a 2-year and a 10-year rising together, that's bad for tech, but good for discretionary stocks, good for bank stocks, good for industrial stocks. Now, if you have a 2-year that drops faster than a 10-year, well, tech rallies, but banks they die, they struggle. Consumer discretionary and defensive stocks get weak. So before you make a trade, if you would just learn what when the 2-year and the 10-year, whatever that activity is, and if you remember one of my members, you got what we call this, I don't know what we call it, but it's a sheet, I guess, that we give everybody, okay? It's called the Bible, and it tells you everything that will happen if the 10-year goes up, the 2-year goes down, the 10 and 2-year go up together. It tells you everything. Don't listen to the people, these jibber jabbers. Listen to the yields and listen to IWM. IWM is another one. It always tells you when the market's going to correct. But let's get back to here. Okay, so you can see these stocks are just not moving, right? They're not moving. Halliburton's not moving. None of those are moving. Now, let's get down to where the big tech stocks are, the ones that we're in. Let's take ASML. Look what happened yesterday on these stocks. So they all rallied, okay, in a downtrend, right? But go look on your chart. We have what we call our Pro 3. You can see where the high is today, and it's closing lower than the high was today. You look at CLAC. If you look where our high was yesterday, okay, it couldn't make a new high today, okay? So why are you in there? Why are you in there buying these things, all right? So all these stocks are getting weaker and weaker because the yields, and because the yields, the 2-year is going up faster than 10-year, and that means that you're not going to make money in your stock. So with what's going on today, everything is financially engineered, the stock market right now. Does that mean you don't go into the market? Of course not. I've always said we never would make money if the stock market wasn't manipulated. If the market was pure, the market was honest, you couldn't make fortunes. But because the market is all manipulated, it's not pure, you can make the people who make a lot of money are the people who understand how the market works. Just like a race car driver, right? He knows how his car works. Chuck Yeager, one of the most famous pilots, okay, during the war and after the war. They asked him why was he so successful as an ace, as a pilot? Because he said, I knew so much about my plane, I know exactly what makes it fly. So every position I got into, I knew exactly what my plane could do. I could go into a steep dive. I knew exactly what it would do because I know exactly how my plane works. I understand the aviation, the aeronautics. I understand it all. It's the same thing with trading, but trading is much more easier than flying. I know. I fly a helicopter. So I want to leave you with this thought. Think about how terrible this is. Consumption hasn't increased, but oil's gone up 56%. What the hell's going on? Headlines. Headlines. People in Washington, somebody in Washington's making a hell of a lot of money. That's crazy. But does it matter to traders that know what they're doing? No, who cares? Matter of fact, I'm glad that's happening because we're going to make a lot more money. If the market was honest and those headlines weren't there, like, for example, when they come out with those headlines and oil keeps going up, but just like today, Schlumberger and Halliburton, all those stocks are supposed to go up. They didn't go up. Well, we're positioned as short because we know what we're doing. But I'd much rather have a market that's corrupt than a market that's honest. You make much more money. You just got to know how does it work. And we'll show you how to do that. We've been doing it since 1998. Show you how the market works. And it's fun and it's easy. And oh, by the way, stop listening. Don't follow those stupid Japanese patterns. You know, the doji, the swinging arm, the one hung low. Why do you think they give you all those stupid patterns? Those patterns were used for trading rice, not stocks. But Wall Street was clever. They knew if they threw a couple hundred crazy symbols at you and tell you that's how you know how to trade, go look at these patterns, that you would have to seek their help. And then finally you would give up trading on your own and go to your broker. So now I tried trading on my own, now I'm going to go to my broker. That's what they did. Just like what's going on now. People they don't know why they're losing money in oil and oil's going up. Because it's manipulated. It's not hard, folks. You just follow the money and follow the yields, and that's what we're here for to help you. See you on the charts, philsgang.com. Check us out.